What was your biggest mistakes or presumptions about the stock market when first starting to learn how to trade? I asked you guys on Twitter and Facebook what your thoughts were on that, and you guys did not disappoint. I'm going to go over some of those comments, questions, and give you my opinions on those as well, all coming up. That's right, guys. So the stock market is closed today. It's President's Day if you're watching this at a later date. And I thought that maybe this would be a good time to have a video like this when there's nothing much going on in the stock market. And so I decided to ask you guys on my social media following over at Twitter. If you want to follow me there, feel free to do so. And on our We Trade HQ Facebook page, which you can also check out in the links below to go follow those as well. And so you guys basically gave me some really good insights on some of the beginner mistakes that a lot of people make and that you have made, as well as some presumptive notions that you might have had about the stock market that have changed the way that you trade, or maybe changed your outlook on how to learn how to grasp this crazy and chaotic market. Speaking of which, I just want to welcome you to my channel. Hi, my name is Brad, and this is Own the Chaos. The stock market is crazy and chaotic, and I've made it my mission to help you own it. So if you want to learn more about the stock market and how to invest, I suggest that you subscribe to this channel and hit the notification bell to get notified every time I put a video up. And if you like this video, I certainly would appreciate the support with a good old thumbs up. All right, so first let's go to Twitter. I think this was a really good opportunity. You guys responded pretty well to this. And the first comment came from Richard, and he said, I'm still making mistakes. He's a rather new trader. I said that, however, I'm learning from them. It's crazy how much psychology plays in the trading. One day you think you've got it, and the next you're proven wrong. But I'm never giving up. And that is, first of all, Richard, thank you so much for sharing your insights and thoughts on that, and being able to admit that you're human just like everybody else, and that we all make mistakes. I even still make mistakes as a trader, but definitely the psychology part of it is a huge speed bump or milestone that you really need to kind of get over. Exercising that discipline is 100% the biggest problem when it comes to new traders. And, comes down to being content with the profit that you're making, or understanding that maybe you made a wrong decision. Sometimes it's really hard for people to admit that they're wrong, even to themselves. And so if you made a wrong trade, oftentimes you'll see people say, well, it'll come back around. I know, I'm confident in the trade that I made. And maybe in reality, they had no idea what they were doing. So they just continue to see their trade continue to go down. And then all of a sudden they're left with a bag, and they don't know what to do with it at that point. Whereas if they would have been able to just tell themselves, hey, you know what, this is a bad trade, I'm getting out, and I'll catch the next one. Sometimes it ends up landing them in a heap of hot water and, in a hole that they can't really dig themselves out of. A lot of you had responses that had to do with the psychology, and we'll get into that in just a second, because there's different perspectives as far as that whole emotional side of trading, and some other people gave some really good nuggets of insight when it comes to that as well. So stick around for that, and we'll get to the next one. So Hope here says her presumptive thought was that getting into trading took a great amount of money, and that actually is a myth. It doesn't take a whole lot of money to get started in the stock market. And really, to get started, in my opinion, it doesn't take any money, because I think you should just be learning before you spend one dime or make one trade in the stock market. On a surgeon's first day of learning how to be a surgeon, they weren't given a scalpel and a subject to operate on the first day, right? They went through years and years of education before they were even put into an operating room. So, if you go into it with that kind of mentality, understanding that you don't need a ton of money to start off, or really any money to start learning how to trade in the stock market, I think that'll set you up for the best possible success. Gather as much information as you can before you actually end up taking that leap. And I think that, it'll set you up for the best possible outcome. I think that was a great comment there that you had, Hope, about, needing a lot of money, because you really don't. And you could take a relatively small amount of money, let's say, $2,000 to $5,000 to start off with. And maybe even certain cases, $1,000, but that leaves you a little bit less room for error, especially just starting out, in my opinion. But it doesn't require a whole ton of money to really get started and to really use that capital to become profitable. And it all comes down to little chunks at a time, and being consistent with your trades, even if it's $100 at a time. Let's just say that you're creating these goals to maybe make $100 a day or $50 a day just to start. Becoming that profitable, you're already ahead of the game when it comes to most traders. So setting yourself up with those goals is definitely going to be a key to your success, and making sure that you're staying consistent with that and understanding the discipline it takes to just take that money every single day that you're trading. All right, so the next one here is from Michael. It looks like he's an OTC trader or over-the-counter stock trader. He says, following the crowd on OTC tickers, thinking the price per share will go to $1, then gets dumped on your ass. Got to do your research, charts, and all due diligence. If a stock is being heavily mentioned on social media, don't buy. Look for volume liquidity catalysts on the quiet ones. Yeah, so I think this can apply to just about any type of trading, even in the larger markets. You have, these larger cap stocks that, surround themselves around a lot of hype, and then all of a sudden, the smallest of things could end up causing everything to crash down. Tilray or TLRY is definitely a good example of that. That was being traded in the big boards, went freaking crazy, and then all of a sudden the bottom dropped out, and then everybody lost a ton of money. So that's a really good, key insight there. When it comes to penny stocks in particular, usually when everybody and their mother's talking about it, it means that they're all in. So at some point, they're all going to sell their positions and get out and take profit, and that which means that if you're getting in at the top, it leaves you with the bag. So, I think that's a really good little nugget of insight there. But the other key thing that I thought was good here too, Michael, was that expecting it to go to $1. When people are trading penny stocks, they think that, I should say just starting out trading penny stocks, they think that if they invest $500 into a penny stock that's trading at 0.001 cents per share, and it starts to move even the slightest bit, and they start to see some really strong gains out of that particular stock, that they automatically start thinking, oh, well, what if this goes to a penny? Oh, well, what if this goes to a nickel? Oh man, what if this goes to $1? I have 1 million shares. This could make me a millionaire. What? Are you serious right now? And I kid you not, this is the kind of mentality that goes along with a lot of these beginner traders, especially if you start off in penny stocks. How do I know this? Well, I was one of those guys before as well. I thought that there were a few tickers that I got into that, could end up changing my zip code. And so it's really tough to not get wrapped up into that and understand that this doesn't last forever, and it's extremely unlikely that something goes from a penny to $1 in any short period of time, or if at all, especially in OTC stock trading. So, when you're looking at something like that, you just have to take those types of moves with a grain of salt. Make sure that you're protecting yourself, protecting your risk. I always tell people, make sure at all costs when you're trading something like that you're protecting your initial investment. So at the very least, even if the stock does move or it doesn't move, you've protected the amount of money that you initially invested in so that you can use those funds to start investing in something else. But at the end of the day, if you're looking into trading penny stocks and thinking that this is the one that's going to change your life or change your zip code, you're better off just going and getting some scratch offs, because the likelihood of that happening is probably about the same. Okay, this one is a really good one that I thought was a fantastic, and thank you so much, Michael, for chiming in here. Starting with too much money, and you would think that wouldn't be a problem, right? Because if we go back to Hope's comment, she said that, I thought that you needed a ton of money to start off with, when in reality, if you're starting with too much money, that gives you a little bit more of overconfidence. And I think the way that, and Michael actually replied here, he said, I thought I could manage my large account and size properly, and I learned the hard way. So if you're starting, let's just say that you're well off, and maybe you can start off with like a $50,000 account, and you've never traded in your entire life. It gives you a little bit of false sense of security, thinking like, oh, well, I can take, a $10,000 or $20,000 position, no problem. And then all of a sudden, stock tanks, and you've lost, who knows, half your money. And it happens. I've seen this happen time and time again, where people think that, if they keep throwing money at the problem, then it helps solve all of their issues, when it really doesn't do that. It actually opens yourself up to more risk. And if you're taking larger positions, this actually opens you up to more risk. And so this can end up being more of a detriment than anything when starting out with a large amount. If you have a large amount of money to start off with, that is great. That's fantastic. I think that if you want to trade with that kind of money, that's great. But work yourself up to those larger position sizes, and don't just start going all in all at once. Everybody should be starting off small. So and it doesn't matter if you come from money or you don't. If you start off small and take those small wins and those small victories, I think that consistency is key. It always is. And so if you learn to take profits, based off of the goals that you're setting for yourself, whether let's just say you're trying to make $100 a week or $500 a week or $100 a day, whatever you set your goals to, make sure that you're doing that, but you're starting small so that you can get consistent, so that when you are able to trade with a larger amount of money, you're setting yourself up. You've done all of the work on the front end so that you can reap the rewards later on. This one's my favorite. This is one of my favorite ones, that people make rational decisions decisions. I could have known better. I used to sell cars. Yeah, I don't know how many of you have gone out and just bought a car on a whim and didn't really do any of your research, but that one kind of made me chuckle a little bit. So yeah, people that make rational decisions. So, we've seen this all the time, right? When you look at something and people are buying up a particular stock and you're like, how do people even see value in this thing? I don't understand. But sometimes it can lead you to, it can lead you to just trading the trade. Certain cases, if you're just looking at a chart, not really paying attention to what the company's doing, especially if you're looking to day trade, this makes it a little bit different when you're doing it, when you're going into actually investing in something, obviously. But when you're just looking at a chart and trading it off of the chart, may not matter what the company is doing. You're just riding that wave and playing the momentum. But I thought this was a really good comment here as far as people making rational decisions. And so I think a lot of times people will get into this hype or follow some sort of group that maybe sees value in a stock and it doesn't really make any sense. And so you should kind of, as a new trader, being like, well, if all these people are hopping in, I might as well hopping in. They must know better than I do. And that isn't always the case. All right, this one's from user Brouhaha. I thought this was a really funny name. I love it, actually. But relationship between book learning and psychology. The psychology of trading has been the experience I'd never expected, and it's the best journey. And so there is definitely a clear balance. And it's just like going to college, right? Some people need to go to college for whatever profession they're choosing to go into, but there's nothing that can actually prepare you for the real world. The books and all that type of learning is definitely needed, and you need that, absolutely. You need to take, whatever course that you need to take, or find all the information that you can on YouTube and Google the hell out of everything that you can find. Soak up all of that information, but at the end of the day, the most valuable learning experiences are through actual trading. And people go back and forth about paper trading and how that isn't really all that valuable because you're not putting skin in the game, and there is some truth to that. But I would still suggest that if you've never traded a day in your life, that paper trading is something that you should definitely get yourself familiar with before you do put skin in the game. There is that psychological element when it's fake money versus real money and how that might play into your emotions. But at the end of the day, I think what paper trading does for people is it at least gets them familiar on just how to place orders and what the difference is between placing a market order or a limit order and all of that good stuff, getting around like the actual logistics of making the trade itself, so that you don't just go into a trading with your actual money and don't realize how placing a market order might impact you because you don't know how spreads work. So, I think that this is very valuable insight here from Mr. Brouhaha, and getting that experience before you really kind of dive into the world of trading and investing is definitely key. All right, so I wanted to grab a couple of them from our Facebook group as well, and this one was one that really kind of struck me. This one's really, really powerful, I think, and I think it speaks to a lot of people. And Susan, thank you so much for sharing this, because I think a lot of people are in your shoes as well, including myself at one point in time. This was never thought in a million years this was something that I could learn. Emotions always getting in the way and not much support from my family. And so I can relate to that. It's tough, especially for traders that have family members that maybe not even, it's just that they're not supportive, but maybe they just don't understand, or they think that you're just doing it for a hobby and you're just, having fun with it, because that's what most people or most family members or most friends see it as. It's just like, oh, you're just playing a game or you're just gambling or whatever. And there's plenty of people out there that still agree that maybe this is just a gambling, a glorified version of gambling. But, times have changed and we know better than that. Obviously, if you're, a full-time trader like myself. But, the family element is really tough. And so that's something that you kind of have to have that mental toughness with your own self and really realize that, there are communities online, as long as you can find the right ones, that will support you. And I'm glad that you're here with us, Susan, so that we can support you over at We Trade HQ. We have a very powerful community that I think is unlike most stock trading communities, in that we really are close-knit. We're not large, we're not huge, there's not thousands of people, but that's what I kind of like about it. We're smaller in the sense that I've been able to get to know people on a personal level within my community, and it's been fantastic. I know everything about their lives. I know how many kids they have. I know what they're doing, outside of just trading. And so getting to know people and creating those personal relationships allows us all to be able to be more supportive, because on top of getting to know you, we also know how hard trading and investing can be. And so so, I think that being able to provide this community for you, Sue, and for a lot of other people that are out there, I think it's a really great thing to have. And it's also why I think it's essential to be a part of a community, especially when day trading, because most people don't get it. And if you're in it, then you do. And it's just one of those things that people who trade are the only people that understand traders. And, anybody outside of that circle, they really just don't get it. So I definitely can relate to you, Sue. And if you guys are out there watching this and are interested in being part of our community, again, the links are down in the description below. It's free to join and be a part of our free community. Whether or not you want to get into mentorship or whatever is neither here nor there, but just being in the community and getting to know people on a personal level and people that are definitely willing to help you become a better trader is something that, again, like I said, separates us from a lot of other communities out there. All right, so the last one here is from Ross, and I thought this was a perfect way to end it. It says, don't keep it all in one effing place. Good trading to you. Take this seriously. And I mean, shoot, he hit the nail right on the head there. Thanks so much, Ross. Not putting it all in one place, diversifying your account, especially if you're getting into investing, and not whole accounting everything. In other words, taking your entire account size and just putting it into one stock is not the way to go about doing it. Understanding that taking reasonable and sensible position sizes into stocks when you're trading them is gonna set you up for the best possible success as far as risk management goes and all that good stuff. So thanks for your input, Ross, and definitely take it seriously. It's not a joke. It's not something that you want to not take too lightly and then end up losing a lot of your money, especially if it's your hard-earned dollars that you made through your 9-to-5 or regular job. So you want to make sure that that money is working for you as well. So definitely taking it seriously is a priority, and don't keep it all in one effing place, people. So that's going to be it for me, guys. Thank you so much for tuning in, and leave me some comments below if I missed something by chance, or if there was something that people were chiming in on that maybe you thought they missed. I want to hear from you. Leave some comments down below. I reply to all of the comments, every single one. So if you guys want to leave some down below, I certainly would appreciate it. And again, if you have not subscribed to this channel, please do so. Hit that notification bell and give me a thumbs up for the value that our community has given all of you out there. So again, guys, I appreciate the view. I appreciate your support. And that's going to do it for me. As always, I will see you all before the bell. And B. Smith is out. Hey guys, thanks for sticking around and watching to the end of this video. If you want to see more content not related to stocks, I encourage you to go check out my new channel over at The Barcast. It's a great podcast where we talk about our lives as entrepreneurs and bring other entrepreneurs on as guests as well to get their stories of inspiration and motivation. So be sure to go over and subscribe to that channel as well, and I'll see you before the bell.